Okay, Papa, here is another cipher pattern I just spotted on the pound dollar. This is the 5-minute chart again, and this is current price action today, Tuesday. Um, this is close to today's low at about 8 or 9 o'clock this morning, something like that here at X. And I've already put in the X, A, B, and C for you. I'm going to put the fib tool on it now so you can actually see the pattern. It is a buy or a bullish pattern. Here's the impulse leg from X to A. You see price pretty much moved unimpeded from X to A, which classifies as an impulse leg. The market is moving impulsively in one direction without any significant retraces. So that qualifies the X to the A. Now we're looking at the retrace of X to A, and price went from X to A, so the retrace will be back towards X. And you can see my fib tools are pulled properly here because you see the lowest to the highest in the direction of the retrace. So as price moves from A towards B, 38 is first, 50 second, 61, so on and so forth. And you can see here that price did close below B on the 5-minute chart. Now, I saw this originally on a 15-minute chart. So if we switch to the 15-minute chart, this now qualifies as a pattern. On the 5-minute chart, price actually closed below the 618 retrace here. But if you move it to a 15-minute chart, price did not close below on a 15-minute candle right here. And I would tend to lean towards the longer term setup as a valid setup. Even though you're looking at the same exact pattern, price on the same exact flow there, just a 5-minute versus a 15-minute. See, the fibs stayed the same, the XABC stayed the same. So on a 15-minute chart, this is a valid setup. You have the X to A impulse leg, all green candles. Then you see price start to retrace, and it finds support here at the 618. No candles are closing below the 618. Now the second part of the pattern qualifies as it moves up to the 141 extension but does not close above it. Now you can see price has not really moved back. This is currently at about 2 o'clock in the afternoon on Tuesday. Price has not moved back below A yet, so we could see this continue on above the current C and invalidate the pattern. But if by the time you watch this, prices continued to weaken and move back down into our retrace zones, I will move this fib from the high A to the high C if this high C remains, and that will then plot our D entry right here at the 78.6 retrace, which if you can or cannot see on my chart, it's 1.5591. So the D entry will be right here as a buy. We'll change that to green for you. Stops below 10 pips below X here. And if we had to put our profit targets in right now, we're just going to base that on this D entry here. We don't know. Price may actually move down in this area, and if price does move down in this area, which is likely, we will need to readjust these profit targets. But as it stands right now, if we're using the green line, assuming that's going to hold to be D, we'll spin our fib around, and now the retrace for our profit targets will be where prices come from, which is the C price or the C high, down to the D here. If this C holds and this D holds, the retrace from C to D will be up to the 38 and the 6-1, and you know you've got your fib tool done properly on the retrace of C to D. Prices coming from C to D, retracing back to C, and your fibs need to be in ascending order from smallest to highest. 31 will be your first profit target, which is 19 pips. Your second profit target will be 31 pips, so that's about a 50 pip trade there. Your total risk will be about 20 pips, so risk 20 to get 50 there. If the C point holds here, you can see price retesting the C highs here, and by the time you watch this video, it's very possible price will have continued on. It's very possible price will have continued on past this 141 extension and actually closed above it, which would invalidate all of this. But if price does continue to move down, you're going to pull your fib from X, this big red candle here, up to C, and D is your entry, and then the retrace, this green line is D because that's the 78.6. The retrace of C to D will be your profit targets. So price moves from C to D, retraces back towards C in ascending order. You've got 38, 50, 61. The 38 and the 61 are your potential profit targets if the pattern holds up. So hope this is another one that sort of helps you eyeball these patterns and understand how to pull these fibs and use the fib tool to set up the pattern. So I'll post this one on YouTube and send you a link, and we'll see what happens. Have a good day.